Welcome back. You're watching our new show, Global Lens. We're joining you from Singapore. The question we're asking everyone here is, what is the mood on India amidst geopolitical uncertainties and the tariff wars that Donald Trump has unleashed? And also, what do they think about the India-China competition as well? We caught up with Samir Arora of Helios Capital to understand his view on India and how he decodes the India story. Thank you very much, Samir, for joining us here, taking out time for us in Singapore. And thank you for being with us on our show, Global Lens. You know, what we'd like to begin by asking you is that there is a lot of geopolitical uncertainty right now around wars, around tariffs. How do you see the India opportunity amidst all of this?
Well, I think that right now India has a few good things happening for it, or going for it. First is that the world seems to be upset with US more than they are with us and others. And therefore, I think that the international investors and maybe even US investors will reduce their exposure to US going forward, even if the US market does well. Because over the last 15, 18 years, the world has put about 70% of its investments into US, taking the MSCI world market as the index as the benchmark, and previously it used to be in the 50s. So you could have said it last year also that 68 is too much or 65 is too much, but at some point, you know, things converge and you feel. So we also have a global fund, and we ourselves are going to have now around 50% of our global fund into US instead of the 70 odd. So if there is that flow away from US, then the rest of the world benefits, and I think India is also one more attractive contender in that.
Right.
And you can see that already in the flows from foreign investors from April onwards. India's got about $5 billion. And prior to that, for 5-6 months, there was some 20 odd billion of selling. So you can see it also, and this could be the logic, because the whole world ex-US is seeing flows.
Right. Now, Singapore has always been one of the top destinations from where FDI comes into India from. Almost $160 billion of FDI has come to India from Singapore in the last 24 to 25 years. What do you feel, who do you feel will actually be the winner? There are several countries competing for foreign investments or diversification of investments, the China 1+1 strategy as well. So how do you think India is positioned to win amidst the Asian
So that's what I was saying, that India has an advantage relative to the last few years on flows. And that is important because over the last 2 years, domestic institutions were buying and foreigners were selling. So the scenario where the foreigners are not selling and maybe even buying is itself attractive. The second positive is the move away from China. Again, even if there's no tariff arbitrage, although currently there is, but even if there's no tariff arbitrage, I think big companies, global companies will want to diversify, which they started after COVID, where companies may have felt that you can't put everything in one market and this thing, because resilience is also needed, not just lower costs, etc. And then they did it, and India got some business from Apple and others. And now there's a second round of that same sort of reminder that you should not do everything in China. And so again, there will be some beneficiaries, at least at some level. So if both these things happen, rest of India was anyway doing well. As long as we get flows and we get some new jobs, middle income jobs, some export potential, then we can move along as we were moving with these two extra things happening for us.
You know, Samir, a question that we were talking about FDI earlier, and why I would like to ask you this is because why the gross FDI numbers are 14% high at 81. Net is a record low, 96% down.
Actually, it is
about $350 million.
But I disagree with that, because this is primarily private equity guys. This will now always happen, because if the private equity guy puts in together, these guys put in say 50 billion in a year, which is what they were putting, then plus minus 7 years, they will want to take out 100 billion. Let's say they make 13-15%, whoever is successful, and so maybe they take out 80 billion. So that time there'll be an 80 billion outflow because there's a 50 billion inflow, and that in that year will dominate any FDI of. So the whole game is that this will now, in net numbers, not look very big, but the private equity guy is the new FDI, and he's then handing over that company after it is made to the domestic investors, and then a second round of this thing comes.
Right.
So in one sense, you can say it's, you have to double up every time.
Yeah.
You put in 50, after 7 years, you have to take out 100. Then somebody else should put in 100, and after 7 years, they will take out 200. But that is the new game.
Yeah.
Because the amounts put in by private equity, which has a finite lifespan, is going to overwhelm these old companies putting FDI into India.
Right.
So,
in terms of the FTAs, we're looking at a lot of activity to have free trade agreements. We could possibly have a free trade agreement with the US, an interim agreement by the end of June, and a full one by fall when Donald Trump comes. How do you think these FTAs position India as an investment
So first thing,
destination?
I don't think that sealed and signed FTAs can happen so fast.
Yeah.
But he's willing to do that. Is Trump is willing to work with framework, and we will also go along. For example, India-UK agreement. I don't think actual implementation will be before 1 year. I guess it has to be going through our parliament and their parliament and so on and so forth. But as long as we know, and more than us, the companies which have to invest in India know that broadly the agreement is there, that USA is not overly penalizing India, and that India has also responded well. These guys will come in without the formal, as long as they broadly know that this is the tariff structure, and that is already happening. So in that sense, this event will, of course, from a stock market might be useful, but for corporates, it's an ongoing thing. They might already be willing, as soon as there's even a simple announcement, doesn't need a formal signing.
Absolutely.
But I think formal signing will take longer than
and to take shape and the things to start benefiting anybody. We were speaking to other investors here in Singapore, and they said that they are right now cautious when it comes to putting money, more circumspect because of the global uncertainty. India clearly is a area where they want to diversify. They feel that India is a country, one of those countries which should get preference. But if we have to enjoy and rise up to this opportunity, what do you think India needs to do from the point of view of making interventions, easing up policy?
So India, from a pure, the act of investing, that is now quite okay. In the sense that FPI approvals come fast, the tax issues for foreigners are sorted out in that sense, whatever it is. I don't agree with that, but it is what it is. So now it is more for the companies wanting to do FDI and all. For the fund managers, they should not be waiting, according to me, because the trend away from US is very, very clear. There have been reports, numerous reports on how suddenly ETFs, which were ex-US world ETFs, so everything except US, have been gaining flows and market share and all that. So they should not be waiting. Please go back to them and tell them, don't wait. I don't think the Indians are waiting. And you can see that in the aggregate FII flows.
Yeah.
But what India needs to do, that way there is a long list of things that can be done. But broadly, from the approval of investing, FPI, tax related, all that is now more or less okay. India, Singapore, UAE, and Mauritius, those treaties at whatever level they are working well, because we are also benefiting from India-Singapore treaty.
All right. So according to you, which would be the possible areas now where you believe there will be strong growth? At Helios, you have, of course, from time to time, you diversify your portfolio, add new things. Which are some of the areas, sectors, or stocks in India you'd be the most excited about right now?
So right now, we are most excited about the financial sector. That includes banks and non-banks. Non-banks basically means mostly for us capital market guys, asset management companies, brokers, stock exchange, depository. That is one group we like because we like the stock market. Secondly, we like the old private sector banks. In that, the number of banks have shrunk a lot, as you know. And the guys who are remaining are the big guys. And these guys did badly for a few years in terms of stock market performance.
Correct.
And one reason for that was the FIIs were selling, and they are big owners. And now if FIIs come back, and I believe they are 100% coming back or are already back, they also like the large financials, and therefore that pressure would also go away. So financials is our number one choice, followed by some consumer. And the sector we don't like, which is the third big sector, is Indian IT services.
Samir, thank you so much for taking out time for us here in Singapore. It was wonderful talking to you.
Thank you so
much. And lovely hearing
your
your views
for your new show.
on the India-Singapore story as well. Thanks again.
Thank you.